Welcome back, everyone, to another edition of Anatomy of a Trade. And today, Roman and I are going to look at a trade. We're not sure exactly what the instrument is, but we're going to use our Wyckoff methodology to do a post-trade analysis. And this trade was done by Steve, a student in the spring WTC2 semester. So, Roman, take it away.
Yeah, we're definitely in the well-defined uptrend. I mean, I really like this trade. Look at where we are first entering. We're entering after the upswing, going into a possible reaccumulation. We're seeing the apex formation with all of the attempts to go down that are failing. So that shows us that bullishness. And then in the area where there is a confirmation. So this is so great because we are entering in the area of the confirmation of this pattern. So all of these points of entry, I see like on the intrabar level here, intrabar level right here. And this is an intraday trade, so keep this in mind. So I'm really liking it. And then we're seeing a non-continuation of the follow through to the downside, or rather, more bullish continuation. The volatility actually decreases in this trading range, which again confirms the bullish bias. And then we are entering again, we are adding for the third time. Really great. I love this. Probably there is some kind of recognition of the trending day. And look at the extension here. So again, quite a few confirmation of the bullishness. As we go up and we extend above this whole structure right here, and you could think of it as like one structure or two structures, one structure, and then on the top, the stepping stone trading range. But again, look at the extension. We see that it's a very, very healthy up bar on the breakout. We see the momentum carries us above, way above this bar. So our stop loss should be below this level right here at that point. And then we're going into the test that has a spring scenario. And after that, there's a continuation. And at this time, we don't see the same type of character of the breakout, right? So we were looking at this breakout and we were looking now at this breakout. So we're seeing how momentum deteriorates. That tells us that the next reaction is going to be more significant than this. And that's what happens. So obviously we'll discuss this. But after that, there is still one more push up, which leads to the ultimate reversal. Franz, what else do you see on the analysis here?
Well, I just like to point out to everybody, you're noticing the behavior back in the apex area where the trade was actually initiated. I think everybody needs to go back and replay that just to see how we're reading the chart at these levels. And notice the volume behavior across this area. We just don't really see any significant selling, and we're seeing an ability of price to move higher. So it tells us that the bias continues to be to the upside. And then also, Roman, where you pointed out how the initial breakout there where his entry number 3 occurred is so distinctively strong. And then you're utilizing a comparison of that to the next area of breakout to try to ascertain how much longer this might have to run in total, and also what the character of the next reaction might be. So back to you. I think all of those are really, really important observations.
Yeah, everything is interconnected. You kind of see how, because of this happens. Because of this slightly weaker picture, the reaction now is more than what we've seen here, but it still suggests bullishness, continuation, at least one more attempt to go up. And we definitely would be expecting some kind of shortening of the thrust. You already see shortening of the thrust, number 1 here, and then as there is the next breakout happening, there is shortening of the thrust, number 2. But then looking at the points of entry, what a beautiful execution. First of all, we've discussed this at the point of the confirmation. Second confirmation, and we're already 3 units in. We're not getting whipsawed by this area right here. So a proper stop loss, as I said, would be just below this bar. And then continuation up. Now there is a question here of the stop loss being, somewhere in this area, like maybe behind this combo of semi-significant bars. You could definitely do this. It would be a better exit than this, like fatal stop loss hit and everything was closed. As you move up, you see like a structure here. This is a test. So put the stop loss or move the stop loss below the low of that test, and then your exit is a little bit more efficient. You will not, obviously, be able to do this when it happens so fast, but you still have number of bars here that are just showing you like, yeah, I'm gonna possibly go down and lower. Plus this bar tells you like, you at least need to trim something. So at the close of this bar probably would be my first trim. And then as it breaks through this level, I'm probably completely out. Franz?
Yeah, a know-it-all bar, I think. Well, why don't we take a look at the post-trade analysis that was done here by Steve. So his bias was definitely correct. You like the entry, so the timing was definitely right. The character, we got that. And the yeah, just points of entry overall. Stop loss management. I think we could spend a minute or two just talking a little bit more about that, although you pretty much hit on that already about how to manage the exit using the stop loss. So good job there. Definitely add-ons, no trims, and potentially that would be one little ding because there would be an opportunity maybe to maximize the returns a little bit better when we see that last move up and exit a little bit earlier. And the exit, I don't know, I'd say maybe.
It's still yes.
Yeah.
I mean, we exited by the rules, by the stop loss, right? I think one of the things here, Franz, is that is this the final trade? That's kind of like the question is on my mind. I mean, like exit, more efficiency, please. Yes, for sure, Steve, let's develop that. But I'm also thinking like once we got hit, or maybe we're just efficiently exiting here, then what's the next step? The next step is still the trade to the upside. So mentally, we should be capable of coming back into this trade and just say like, okay, well, maybe somewhere here's our point of entry again for this very short-term, swing trade right here. Franz?
Yeah, I mean, we could talk about follow through to the downside and that reaction where the Steve's trade was terminated, but we could see that there is some sort of actually shortening of the thrust of the downside, and we see the volume signature still doesn't suggest that supply is completely dominating the picture here. So that being said, Roman, I think we can take just a quick look at the comments and lessons, not so much to go through them one by one, but more just to recognize that the whole purpose of anatomy of a trade and post-trade analysis is to see what our strengths are and to build on them. And we definitely see a good awareness here of entry technique. And then also whatever mistakes that we see, especially mistakes that we have a tendency to repeat consistently, we can put rules in place to counteract them and improve our long-term trading. So that's it for me, Roman. Over to you.
And probably that's it for me as well. Again, just consider staying in this trading mode until the trade is completely done. I mean, this definitely shows a big break, but there is so much strength. You could definitely have a smaller trade right here, overcomes the resistance, and then change your behavior and break after that. And that's it.
Great. Okay, well, thanks everybody, and thanks, Roman, and until next time.
Thank you, Franz.